I'm a walking money machine. Hey, it's Vinny. Today, we're going to be looking at Tesla's ROI and why I think it will be truly unmatched. This is one of the most powerful things this company has going for it. I'm going to keep it really simple, but I've been doing some reading and I started thinking about it. This metric is so much far more important than the stock price, than the PE ratios. The PE ratios are looking backwards. Too many people are focused on past performance in general when future performance is a better indicator when you're looking at what to invest in. So we're going to compare it to some other companies as well, but even quarterly reports, right? A lot of this in the long run is meaningless. But if we look at something like ROI, and I'm going to simplify this, make it really nice and simple today, just do some napkin math here to just show you guys the future of Tesla, the money minting, money printing company that I believe this already is and is only going to become more of, and why I think this is the best indicator to really be tracking over long periods of time. And it just becomes painfully obvious to me. This is not even a bull case. This is just reality. This is just real life. This is what Tesla is going to accomplish here, I truly believe. So let's take a look. Return on investment, or ROI. Calculation of the monetary value of an investment versus its cost. The ROI formula is profit minus cost divided by cost, similar to ROE. So while ROI measures the percentage return on an investment, ROE measures the percentage return on the equity that's been invested. So in other words, the ROI is measuring profitability of an investment, while ROE measures the efficiency of that investment. Both are good, both are important. There's also return on invested capital. There's a bunch of different ways you can look at this, but today I want to keep it really simple. Just look at ROI for the most part, because in general, the higher the better with all these numbers. So if we take a look at Tesla's ROI here on macro trends, as you can see, Tesla's only been profitable for 2 short years now. We are in such early innings with this company. It is truly beautiful. So Tesla's ROI in 2021 was 15. If we compare that to, the other big tech companies with huge margins here, Google, for example, their ROI in 2021 was 28, in 2020 was 17. Now I think, yes, now, in hindsight and everything, looking at these years, 2020 and 2021, especially when it comes to these big tech type companies, a lot of this revenue was maybe a fluke or a fugazi. There was money printing going on. Everybody had all these stimulus checks. So I think if we go back in the time machine a little bit here, back to, the 2019-18 period here, gives us a better read on what we can really expect. So if we look there, 2019, Google's ROI was 16, and 2018, 16. The year before that was only 8. Before that it was 13. Another year of 13. So let's just say Google, mid to low teens of ROI, right? Tesla, 15, and this is like still early. It's going to go up with this company as they get these gigafactories online and the profit margins increase, right? Because they're laying out a lot of investment right now. They haven't yet reaped the full benefit of those investments. We're going to look at all that in more detail in a second. But if we just compare it to some other companies, Costco is another company. I know that Joseph Carlson loves Costco, another YouTuber, and Terry Smith is big on ROIC, return on invested capital. But again, if we look at the ROI of Costco, it's great too. If we skip these last 2 years here, it's in the mid-teens, 15, 17, 16. So that's great to see. Let's do one more. We'll take a quick look at Apple's ROI, one of the best companies arguably of all time probably here. So again, their last 2 years, it's been utterly ridiculous. I don't think these numbers are sustainable, but you go back a little bit more, their ROI 30, 29, 20, 22. So even better than that of Google, and obviously Apple, a lot of software margin there, and increasingly so. So, you might say, well, why are you counting Tesla's most recent year if that's a fluke year? It's just Tesla is a different story here, right? They're just starting. They're just getting really going. The flywheel is just beginning. This company really has only been public 10 years, 2012, they IPO'd, and obviously it took a very long time to get really going. All the odds were against them. They faced bankruptcy every minute of every day for 10 years, basically. But if we just look at the simple numbers, we're going to look at the last quarterly report, and I'll show you guys why I believe this is only going to increase and why this is the most important metric. This is another thing. This bear market, it's tough, especially to the uninitiated, to the people who are newer to this. It's brutal. Yes, everything is telling you want to be selling your stocks. Let's pull up the fear and greed index here, which has been pretty close to breaking the dial. This dial is about to fall off over here, okay? We pull up the fear and greed index. As you can see, we're in extreme fear, and there was a point where this dial was all the way at the 0 here, and it was literally going to break off. But it goes against everything. This bear market could go on for another 6 months, a year, 2 years, 10 days. Nobody knows. And anyone who tells you, they don't know what they're talking about. And it just really, I've been doing a lot of thinking, a lot of reading, trying to just take a step back and really just get back to focusing on the long term, because that is the only way to do it. That is where the big bucks are made. You might make a quick profit day trading and short term, make a quick money, but like it's just gambling at the end of the day. This is my personal belief. I'm a long-term investor. The money you will make if you invest in the right companies and hold them for 10, 20, 30 years is going to far dwarf that money, the pennies you're making by just speculating in the short term, right? But anyway, I'm getting a little off topic here. Let's go back. Extreme fear, probably a good time to be buying, but I just continue to dollar cost average as I always do. Okay, so why do I think Tesla's going to have such a high ROI that I think is even going to compete, if not be better than these big tech companies like Google, Apple, even a Costco who has a great ROI? This doesn't even factor in any of the stuff we don't have yet. I'm not talking about full self-driving. I'm not talking about the Tesla bot. I think all these things will make this even better, but let's just look at today what we already have, what we already know. Tesla, essentially, if we just do some quick napkin math here, we look at their last quarterly report. Tesla's essentially making automotive gross margins around 30%, right? About 1/3 of every car they sell, the money they make from selling that car, 1/3 of that is automotive gross margin, gross profit, right? So let's just say, average sale price is around $50,000. They're taking home $15,000 in profit, right? And if we look, Q2 2022 was one of a terrible quarter. I mean, it really, in the grand scheme of things, wasn't that bad. But obviously, their factory was shut down, and that hurt them a lot. It hurt the profit margin a little bit, hurt revenue. But if we just add up the last 4 quarters of revenue here, 14 billion, 16, 15, 12, you get to about $57 billion of revenue, which is already insane to think about how quickly they've gotten there. And of that, they brought in like 17 billion of gross profit. So again, I'm going to just simplify this. This is a base case here. I think this is really, it's probably going to end up being better than this because they're going to continue to improve. They're going to get more efficient. They're going to make more profit, not less. But anyway, let's just say for the simple napkin math sake here, $50 billion of revenue, of which about 15 billion or about 30% was gross profit. Now, let's look at Tesla's investments, Tesla's ROI. The Tesla Shanghai factory cost them $2 billion to build. Okay. The Berlin factory costs about $5 billion to build. And the Texas factory, I'm getting some different numbers here. I got $1 billion, but then I also see $10 billion. So let's just go with the $10 billion. Okay. It says here it's going to be a $10 billion investment. Let's take the average of those three, $2 billion, $5 billion, $10 billion. Let's just say on average, Tesla, it costs them about $5 billion to make a gigafactory. All right. Now last year, so just put that in the back of your mind for a second. All right. So Tesla's current run rate, we know. Let me just move this over. Tesla is currently producing over 1 million cars a year. But if we just go by 2021, they did just under 1 million, right? This is a number that's growing. They are not demand constrained. They are supply constrained. The demand is so large here, right? So let's just say with each gigafactory, we know that at a bare minimum, each gigafactory is going to get up to the point where they could probably produce 1 million vehicles. Maybe with the exception of Fremont, it could get pretty close just because it's a smaller, earlier one. But if we look at Berlin, we look at Austin, we look at Shanghai, we know that these factories are capable of producing at least, when they're fully ramped, 1 million vehicles a year, probably much more than that. But again, I'm being very conservative here just to give you the base case. So, like we said, Tesla, let's say, $5 billion on average costs them to make these factories. And then as soon as they get to that point where they're producing 1 million vehicles from it, they're making 15 billion gross profit a year. A year, not one time. They're turning $5 billion, a one-time $5 billion investment, into $15 billion annually. How is anyone going to compete? This is unheard of. This is utterly insane. So then you can think what you want. They can take all that money. They're going to pump it into solving FSD, to making Tesla bot, to doing whatever they want, energy storage. But just there alone, I mean, yes, this is the bread and butter of the business right now. Think about that. If nothing changes, if they only have these 4 factories, they never build another gigafactory. Spoiler alert, they're going to. They never build another one. The 4 they have right now, let's just say 2 years out, 3 years out, they're all fully ramped. They're producing 4 million vehicles total, 1 million at each on average, let's say. And that will bring them about $200 billion of automotive revenue. Let's take 30% of that would be if automotive gross margin, if everything stays the same, right? And again, remember, they're getting more efficient, not less. They're constantly improving. They're adding more robots. They're going to have the Tesla bot working in the factory. Oh my God, you guys. Anyway, it's really hard to contain my excitement if you haven't noticed. So let's just say that 4 factories, 4 million vehicles a year, $200 billion of revenue, 60 billion of which will be automotive gross profit. It's actually it's insane to think about. It's hard to fathom this, but we already see this is already happening. This isn't even some pie in the sky thing. They only need to sell 4 million cars a year, and that would put them up there with the top 3, top 5 companies in the world of revenue. This does not account for anything else. No FSD, no Tesla bot, no energy storage. All of these other things are going to start bringing in an insane amount of revenue as well. Oh, God, guys. So it's funny. Ron Barron had touched on this in a recent interview. I'll link to my video. I talked about where this is essentially what he had said. I posted this a month ago. He was on CNBC talking about how Tesla's ROI is insane. They build 1 gigafactory. It costs them $5 billion and it makes them $15 billion a year. So check out that video. I'll link that down below. And yeah, it's just insane. I mean, like I said in the beginning, Tesla, I'm a walking money machine, to quote the great Gucci Mane. If you enjoyed this video, guys, please don't forget to like and subscribe. Drop me a comment below. Let me know your thoughts. What am I missing here? Or am I not being bullish enough? Let me know in the comments below. This is Vinny from the Investment Club, and I'll see you next time.